Hello everyone. Thank you for the overwhelming response to part 1. In part 2 today we are going to cover about volunteer and other contributions 12 to 22. Class 12. Whether auditor has filed a form 10BD for the previous year? Yes or no question. If you are selecting yes. Sum total of donations reported in form 10BD furnished by the auditor during the previous year. What we normally disclose in form 10BD? We disclose the corpus donations, non-corpus donations, any other donations including donations in kind. The sum total of all the donations reported in Form 10PD has to be furnished here. Question number 14. Donations not reported in Form 10PD not required to fill Form 10PD. These are two different clauses. Donations not reported in Form 10PD not required to fill Form 10PD. Classic example of this is donations in kind. Donations in kind can vary from anything from books to medicines to food items to clothes to anything. Donations in kind are not eligible for ATG deduction. So there is one school of thought which says that since donations in kind are not eligible for ATG deduction, then necessity to file Form 10BD does not arise. There is another school of thought which says that since donations in kind form part of the books of accounts, we are disclosing that as donations in the books of accounts and the financial statements and the audit report, etc., then it has to be disclosed in Form 10BD. Irrespective of whichever school of thought that one follows, donations not reported in Form 10BD not required to fill Form 10BD. This clause requires reporting of those categories of donations here. So I have given an example which captures all the donations in kind in an in a manner so that every valuation aspects is being captured here, and there are implications of donations done out of donations received. So, for example, this trust has received 100 gunny bags of rice, it has received 200 gunny bags of sugar, it has received 100 liters of ghee, it has received 10 sovereigns of gold, it has received 1000 numbers of notebooks and stationery, it has received clothes 500 dhotis, 500 saris, it has received medicines 1000 boxes, it has received surgical equipments 2 numbers, to refer note 1. It has received air conditioners where the donor has made payment to the supplier selected by the trust. It has received a loan in 2018. That loan has been converted as donation in financial year 22-23. So this is the quantity against each of the items that has been received as donation. This is the value, and applied quantity is the quantity that the trust has applied effectively out of the donations received. In this scenario, out of the 100 quantities of rice that the trust has received, the trust has donated 80. Sorry, the trust has applied 80 bags of rice. It has donated 10 bags of rice, and the balance quantity that is available with the trust is 10. So in this applied quantity, we have the exact application by the trust, and in the donated quantity, we have the quantity that is being donated by the trust along with the value. Note 1. Surgical equipment was made available to another trust free of cost. Note 2. Medicines, clothes, and air conditioners donated to another trust not having the same objects. Note 3. Rice and sugar donated to unregistered persons. Why I am referring to this note 1, 2, and 3? The reason for this will be covered in the subsequent videos. Calculation of amount applied for charitable purposes. Total donations not reported in Form 10PD. This amount is the sum total of all the donations received in kind subject to the valuations that we have done. Practical challenges that we might face is that how to value the donations in kind. Donors, sometimes companies who donate in kind, they give the bill along with the items that are being donated in kind. So valuation becomes easier. But there are cases where bills is not available, or there are other cases where there is a religious trust at the for example during the time of a festival, they collect donation from people in that village or in that area and perform a event whereby they receive 100 bags of rice and they provide food as donation. uh, the practically we call it as annadanam here. So that is also taking place. In that case, the valuation, how the valuation for those items would be done. So in my view, the trust has to devise a method whereby it captures the value of every item that it is receiving in kind, and it also has the quantitative particulars for every item of donation that is receiving in kind, and it should also have such details of what is the quantity that it is further donating. It can receive 100 bags of rice as donation, it can donate 15 bags of rice to another trust as donation. So the trust has to have all the records with respect to donation in kind, and only then they can have an exact valuation of what is the donation in kind that has been received, and then only they can fill the correct amount in form 10bb. Please note, donations in kind are not eligible for ATG deduction. So it does not mean that this need not be disclosed in books of accounts or form 10bb. It has to be disclosed in the books of accounts. It has to be disclosed in form 10bb. Question number 15. Total voluntary contributions received by the audit during the previous year. It is sum total of 13 and 14. Total foreign contribution out of the total voluntary contribution stated in 15. Here, if there is any foreign contribution, please you need to disclose it here. But the catch here is that if you are disclosing any amount in question number 16, then it is incorrect. Why it is incorrect? Because Form 10bb does not apply when there is a single rupee of foreign contribution. Form 10b applies only in the scenario where you have received a single rupee of foreign contribution. So, if you are disclosing any amount of foreign contribution out of voluntary contribution in serial number 16, then you are indirectly accepting that you should have chosen Form 10b, but you have not chosen Form 10b, you are filling Form 10bb. So, please be very careful while selecting this particular clause. Voluntary contributions forming part of corpus which are included in 15. So there can be voluntary contribution which is forming part of corpus, which is with a specific direction from the donor stating that it is forming part of corpus. So that you would have included above. That you will have to specifically exclude here and disclose. The next clause is anonymous donations taxable at 30% under section 115 PPC. So in short, anonymous donations, any trust that is established for only for religious purpose, anonymous donations does not apply. Anonymous donations, it is donations received without the KYC details of the donor. So, what are the scenarios whereby anonymous donation provisions are applicable? That is, what when tax under 115 BBC section applies. One simple scenario is that when you are receiving the donations that is exceeding 1 lakh or 5% of the total donations received, if it is exceeding this particular threshold, then it is taxable under 115 BBC. However, it is subject to some exclusions. One of the exclusions is if there is a religious trust, if wholly religious trust, if that trust is receiving anonymous donations, it is exempt from tax. And we would be covering a separate video for taxation under 115 PPC. Application outside India for which approval as per proviso to 11(1)(c) has been obtained. Here again, if you are having any amount that has been applied outside India, you need to disclose here. But again, the catch here is that if you are disclosing any amount here, you are indirectly accepting that you have to fill Form 10b and you are incorrectly filing Form 10bb, because Form 10bb does not apply when you have a single rupee of foreign contribution, when you have a single rupee of foreign application. The last clause in this regard is voluntary contributions required to be applied by the auditee during the previous year. It is the total of 15 minus 17 plus 18 plus 19. 17 is the voluntary contribution forming part of corpus. 18 is the anonymous donations taxable at 30% under 115 BBC, and 19 is the application outside India. So 20 is the sum total of 15 minus 17 plus 18 plus 19. 21. Income other than voluntary contributions derived from property held under trust referred to in section 11, or income of the fund or institution or trust or any university or other educational institution or any hospital or other medical institution other than contribution reported in serial number 15. Here we are supposed to disclose the interest income that we receive, the rental income that we receive, because in this particular clause you will have to disclose all the items that you have not reported in any of the clauses above. In effect, this is a reconciliation with the income and expenditure account or the receipts and payments account that the trust prepares. So any income that you have not reported in any of the clauses above, like interest income or rental income, that you will have to disclose here. Clause 22, it is the income required to be applied by in India by the auditee during the previous year. That is summation of clause 20 and clause 21. So that's all from my side, my dear friends. I hope you really enjoyed this video. I will see you in the next video. Thank you. Bye bye.